So let's talk about Euro Sterling here on the weekly time frame. It's been a long time since we traded this cross currency pair, and finally, after much prevaricating, price has finally got up to this much talked about level of resistance, where price has not been above it since September 2017, so almost 2 years, and we've seen a good rejection of it this week. What is interesting as well is if you look at the previous weeks preceding this week's, you can see that we haven't had a seller bar for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 weeks. And we haven't really had price taking out the low of the preceding 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 weeks. So that is something. That is actually quite interesting. We've got a bearish pin bar reversal at the top of the range where we can reasonably expect sellers to come into the market. This level hasn't been broken for just shy of 2 years, and bearish pin bar reversals are by their very nature bearish. We have the sign that we've got the open and close in the bottom third of the bar, we've got the tail rejecting the level, so we could treat this as a reversal. Now there we have it, a reversal on the weekly time frame. So how are we going to trade this? Well, quite simply actually. We're simply going to place an entry below the low, stop loss above the high. Do we have bearish reversal divergence? We don't, no. Oops. However, what we will be looking out for is a lower high on the 4-hourly time frame. We could even get a bearish head and shoulders on the 4-hourly time frame. You can see left-hand shoulder, head. You could potentially get the right-hand shoulder. And if we do, that will further qualify this trade. However, irrespective of that, the fact that if next week takes out the low of this week, takes out the low of this bearish pin bar reversal, then that is really saying something, because the low of the preceding 10 weeks has not been breached. Okay, so that would be an event in itself. So this isn't a false breakout, ladies and gentlemen. We can't 50 fib it. We can't take it against the midpoints like we typically would if it's a false breakout and the tail of the pin bar was essentially above the level and the open and close was below it. However, we do have that significant kind of tell that if we're triggered into this trade, if our order, which is below this week's low, and our stop loss is above this week's high, just closing, then that would be an event, a 1 in 10 week event, and we can reasonably expect momentum to the downside. If we take a very quick cursory glance at the British pound versus the US dollar, again, we revisit this one. It looks bullish, mildly bullish, dare I say. Of course, it doesn't quite fulfill our reward criteria to take it wholeheartedly. But if we compare that with the euro, the non-event currency, the euro is, okay, we have just been moving sideways for the euro. So we're kind of trapped inside this. Let's get this rectangular box out again. We really haven't done anything really with the euro for quite some time. We're sandwiched between a level of support and resistance. So given that we are at the midpoint in this rectangular box, and based on what price has done before in this rectangular box, it's on its way down, that is great for our euro sterling short, because essentially if the euro dollar is going down and the British pound versus the US dollar is at best going up or even going up slowly, then that is great for our euro sterling sell. That's where we've got that kind of tick in the box there. And let's take a look at the reward to risk, because I know we had such a poor reward to risk for the British pound versus the US dollar. You're probably thinking, where's my reward, damn it? And you'll get it. There we go. So like I mentioned twice already, we have our entry below this week's just gone low, stop loss above the high. Let's just put it up here a little bit more so it's slightly more accurate. There we go. That's very fiddly. Okay, so that is a solid. Best case scenario, if it goes to the bottom of this range like it has many times already, then that is a solid 3.2 to 1 reward to this trade. And as per normal, what we'll simply do is we'll scale out. If we trigger into the trade, add a 1-to-1, and we will scale out again at the midpoint if it gets there, and then we'll scale out again if as and when it gets to the bottom of the range, because it could break the range, the bottom of the range, this level of support. It has done twice. Earlier this year in March, it broke this level of support, so it could happen again. And if we are going to see that happening, then if we are in at this very efficient price point, this bearish pin bar reversal at the top of the range, last time price got to this was December last year, around about the turn of the new year, then you will basically be in the move at a very efficient price point before we can see a longer term theme unraveling. Okay, so that is the euro versus the British pound on the weekly time frame.